Well, to begin with, the price of petrol is expected to witness some significant increase from this week. Data secured from bulk oil distributors show that it should be going up by more than 7% a litre. Now, let's show you some of the facts that we are gathering for you. Yesterday, oil prices jumped after EU leaders reached an agreement late to ban 90% of Russian crude by the end of the year. The embargo is part of the European Union's sixth sanctions package on Russia since it invaded Ukraine. Brent crude currently trading at $123.82 a barrel. Let's bring in energy specialist Dr. Yusuf Suleimana to make sense of the latest developments. Grateful you could join us this afternoon. So summer is approaching and there's going to be high demand for fuel from people in the West as they make their plans for summer. And then there is a big one. The ban on 90% of Russian crude by EU leaders. Explain to our audience what is happening.
Yeah, thank you very much, and good afternoon to you, Daryl, and good afternoon to your channel viewers in Ghana and across the globe. Thank you for having me. Yes, indeed, this is going to send a huge rippling effect, and that's what we've already seen. But to put it on into a right perspective, what we see now is what I do explain, or I do put it as a speculative jump. Actually, this has not been actually cut in Russian export as we speak now, and even that this thing is supposed to take effect by the end of the year, as we are told, and they're going to take about 90% of Russian oil export to only EU, not to the global energy community. And mind you, EU as compared to other bulk consumers like the China, the eastern part of the the world, China, what's called India, that's not comparable. However, it is still a force to reckon with. And so what we have seen now, we can say that it is actually a speculative jump. It will take up to, let's say, the next 6 months for that to be effective. And even that, there could be changes, because what I see now is that they are testing the waters. Russia is still key to global energy security. Russia is key to EU energy security. So EU, and even at the last meeting, it was Hungary refused to actually go by, the pledge to ban Russian oil because they don't have any alternative. It has to take a lot of concerted effort by other members to bring them in. So as you see it now, I would say that it's a bit of speculative jump. If actually this crystallizes out into real shortage in Russian export, really blockade of Russian crude export to the global market, let's say part of EU, yes, we will have skyrocketing oil prices, and we could even see it getting about 115 above. But until then, I think we will have to monitor the market and see how it goes. However, there are other like bullish momentum that is also reigning within the space, and you just mentioned one of them. Summer is approaching. That's one of the factors. And also another factor is China. You remember China has a bit of lockdown. Just now they are easing up, and so that has also put pressure on demand. So demand has also increased in the global space because of easing up of lockdowns in China. And remember, China is not a main player in terms of petroleum consumption. China is number 2, followed by US. After US, which is number 1 consumer of petroleum products globally, China is number 2. So if China economies are opening up, it is just presupposing that it's going to put more pressure on demand. We have other things like the Strait of Hormuz. I don't know whether you've heard something about that. It's also a critical choke point where hydrocarbon product, petroleum product, and crude oil has been exported from the eastern part of the globe to the western part. We have a little bit of political instability there between Russia, between Iran and the US. All this is feeding in, but all these are shadow. Actually, the main wild card here is this kind of ban. It's a big news. Once the ban crystallizes into quantum effect, I think we're going to have oil prices skyrocketing. And so it's not surprising that we have it as 123, and that has also cascaded to high pump prices that we are paying.
And while this may be speculative, the EU leaders are walking the talk, and they are gradually winning themselves off Russian crude. How feasible is that plan in itself? And it looks like we are headed for a bit of a shake-up in the oil market. JP Morgan, for instance, warning that we could see oil prices go as high as $185 a barrel.
Yes, that's a possibility. Even some analysts are saying it could go as high as 200. But I'll come to the same point again. EU, they are very resolved and they are very resolute, both the oil side and the gas side. But I'm just looking at EU consumption as in how much they consume from Russia as against the eastern bloc of the global community. EU doesn't consume that much from Russia in terms of oil. If comparing it to China, comparing it to India and then the rest. However, it is still a big news. Even EU per se, they are putting 90% because they are saying sometimes even they will allow pipeline crude oil because some of their members, they don't have solution. I can tell you, they don't have solutions to some of their members. So as much as they are very resolute, in banning the oil and in banning oil export, banning oil from Russia, they are also very careful about their energy security of some of their key members. Notable among them is Hungary, who are at the moment struggling to see how they can, balance the deficit as in terms of if Russian oil is to be banned. And I would also like to put it in perspective and on record that Russia still has oil going to the global basket. If Russian oil is to be banned completely, we will not have this oil price as we are seeing now. Russia is number 2 in terms of how much oil they produce into the global basket. They contribute about 10 to 12% of the entire oil that is produced pre-COVID era. So that's not the main player. So banning such a player is what analysts like JP Morgan, they are forecasting that it will go 185. Because yes, if assuming Russian crude oil is being banned in totality, we will have an instant shock. But I foresee that it might be very difficult. Russia will find other ways to get the crude oil into the global basket, through other means. So that's actually why we are even having a 133. Otherwise, it could even go more than that. So we are hoping that, at the end of the day, cool heads will prevail, that this conflict resolved. But as long as we continue to persist and, pressures on inflationary pressures continue to grab the global energy community and then the global economy, I think we should prepare for hard times ahead.
And while the geopolitics play out, we are suffering, right? Countries like Ghana who depend on the West for oil. And we've talked about how to mitigate the impact on the consumer here. There's not indication yet that government is going to remove taxes on fuel products. So there are dire implications for us. What can we do?
Perfect. You're on point. There are dire consequences for economies like Ghana, especially for us, the kind of model that we operate, that I always mention, that it doesn't guarantee us any strategic advantage. It doesn't guarantee us any competitive advantage. And what's the model here? The model here is that we produce crude oil, not that much, but at least we churn out we export some crude oil, and we end up also importing almost about 100% of what we consume as petroleum products. If assuming we were to have a way of balancing some of this instead of getting some of this locally. We have a local refinery that is robust, that is efficient, that our BDCs can source this oil locally. This finished product locally. I think it will guarantee us competitive strength. But at the moment, I think we are not seeing that yet. I'm told we have a private refinery coming. Oil is still there. So we are urging, on urgent basis, we're urging the policy makers of the day, the government of the day, to take this serious. That at this moment, refinery is a savior that we need in the country. We need to have a refinery running. If you have a refinery running at this moment, it's going to serve as a big cushion, and it's going to serve as a serious pressure relief for the cedi, for the dollar, and then the like. So yes, we do have the strategic advantages. One is the refinery. The other one is storage capability, as in boss. We have to reactivate all our storage capabilities because that is also a strategic strength. When these global things are playing out, if you remember, US released severally some quantum of petroleum product from their SPR, that is their strategic petroleum reserve.
Okay.
That is a national security, contingency measure or contingency response. Do we have that? I said no, we don't. We do have the infrastructure in place, but we haven't activated that. So I urge that we, on urgent basis, let's look at the refinery, let's look at our storage capability and revitalize these things. Because this thing is cycling. It will come back again. Even if we get off this particular problem, it will come back again. And when it comes back again, we should be in a position to be able to support ourselves.
Thank you so much. Dr. Yusuf Suleiman there. He is an energy specialist speaking to us about crude oil prices. And as we've been reporting this afternoon, we expect a 7% increase in petrol prices this week.